let's start with Mumia's sugar. Profits down by a third. This just came out some, and I appreciate that you may not have had a chance to see it, but the main headline figure here is the profits are down by a third, mostly because of lower production. Is this something that is unusual?
No, they first of all they've been having problems with securing the raw materials from farmers because of competition from other. They call it cane poaching.
Right.
So we partly expected that. They were, however, saved by a tax credit, so they can sustain their dividend. We're happy for that. And we know that this cane growing in the western area as well as had its problems, but we also know that the project in Tana River, down at the coast, that could be a game changer for them.
Cane poaching sounds like something you'd use in football or in the corporate world, not in sugar manufacturing. But hey, the company is a very diversified one. They're even a power producer, so sugar is obviously still the mainstay, but you get the sense that the management is trying to look at other avenues.
Obviously, to stabilize their revenue streams and, of course, maximize on all the opportunities that they have at the moment. But also even the power production program has had its challenges as well because of securing bagasse, which is the raw materials for generating power. So by them securing, bagasse dropping down, obviously simply because of again cane poaching, it becomes an issue for them. So it has its challenges as well.
Let's move on to another company that reported profits yesterday, Scan Group, the integrated marketing services company. The half-one profits were up 8.6% because billings increased, and the share took very positively to that news.
Yes, there's been a healthy amount of optimism generated from Scan Group, not simply from its performance, but also from the acquisitions of the South African arm and a local arm of Ogilvy. So I guess from both sets of data, because it's not really about what they're producing now, but also what they expect to do in the future. And this being an election year, you expect a little bit more in terms of publicity coming through, and so the ad spending should grow up.
Though in all fairness, depending on what happens with the election, it also might be a very bad year for them.
Well, it could go either way.
It could go either way.
Yeah.
Kenya Airways, we talk about it all the time, but because there's always so much to talk about with Kenya Airways, yesterday the judge removed the temporary injunction against it firing its staff, or rather retrenching its staff, the voluntary retirement scheme. So the case will now be heard early next month. This is just a speed bump, or is it something more serious?
Well, for especially international airlines, we've seen union action push airlines into negative profitability.
Right.
So it's something I'm sure all investors will be looking at keenly, and of course how the judges weigh into the case could it depends on how that plays out for them. Because if the union position is validated by the courts, then they'll be having a bigger monster to deal with. If it goes the other way, then I guess investors will heave a sigh of relief.
And one of the reasons why Kenya Airways is honestly retrenching staff is because the collective bargaining agreements worked out by these unions, they say, are too restrictive. So we need to just cut some of the staff so we can remain lean and mean, as it were.
Yes, cost is a very big issue, and I think there are two major costs. There are staff and energy. You can't do too much about energy. That's controlled by something else. So staff costs means perhaps one of the few places where they could manage their costs. And of course, from what we've seen even in developed countries, when the labor unions get too much from companies, it becomes a problem in terms of costs and even management of the company. So at some point, sooner or later, people will have to go, because at some point capital investment becomes a better avenue for growing a company than labor growth. I mean, general labor growth.
But to their credit, they're receiving brand new Embraer's jets for at least the next few months. So at least on that sense, it appears to be working.
True. But perhaps what you could argue is that the structure of the employment is what will change.
Yes.
But they have to maintain a lean working force, like you said, and highly productive one at that, so that they can be able to manage.
NIC rights still trading at a premium. What is the market thinking about these?
Well, there's quite a bit of demand there.
Yes.
Diamond Trust rights results have just been published.
Right. Maybe you might want to tell us. I haven't seen those. How did Diamond Trust Bank do?
Well, from the unsubscribed lot, and there's a small bit of unsubscribed. The overall subscription for that was, I mean, the overall was, we saw at 86% of a 186%
subscription rate. So 86% oversubscribed.
Yes. So allocation there is 22%. Now, if that was Diamond Trust, you can only imagine how NIC will be.
Exactly.
Yeah.
All right. So that is a good indication. I was asking an analyst yesterday, are we having a bit of a rights glut? Everybody wants to do a rights issue these days.
You know, after what happened towards the end of the year, and now that interest rates have come low enough and valuations are a bit better, everybody wants more stable capital than capital that depends on interest. So at this point, people are trying to secure financing of that nature, and the most obvious one is the rights issue. I wouldn't be surprised if actually on the private space there are also quite a number doing private placements,
right.
Just to secure the same type of capital, just to be a little less reliant on debt, and so that's the trend right now.
All right, let's move on to the shilling, which weakened for a fourth straight day yesterday. To be expected, considering we're waiting for those inflation numbers, hopefully in the next hour or so.
Yes.
What do you make of that?
I think perhaps people may be taking a wait and see attitude. And for us, we're a bit vulnerable because we're dependent on the capital account rather than the current account. So there's a bit of vulnerability there. But I think the fears are probably overhyped because yes, you could see a lower interest rate coming through, and as a result of low inflation. But if you look at real rates of return,
right.
they are higher now than they were perhaps at the beginning of the year when interest rates were at 20%, because inflation rate was around that area.
Yes.
But now you've got an inflation rate of trending towards about 7%, and you've got an interest rates of about 11-12%. So you've got a real rate of return about 4-5%. So
most Reuters analysts Reuters poll expect inflation to come to 6.75% roundabout today. Where do you sit on this?
No, I'm not going to name any number,
right.
but I don't think they're too far from the truth. However, there are certain risks towards inflation that we must point out. For example, oil prices have started trending up again because of the recent hurricanes that saw some refineries in North America shut down.
Yes.
Yeah, the Venezuela fire, and of course there's always a small risk of Israel-Iran, tensions spilling over to the rest of the energy sector. And of course, apart from that, there's also seen drought in the northern hemisphere, and that could push up food prices in the international markets, and we're exposed in that area as well because we're net importers. So those are the risks I would like to point out at this point.